Good afternoon, traders and investors. This is a delayed Joel Elkanah getting to you. Gotta love all this technology here, but thanks to my good buddy Josh, I'm up and running here. Where'd Mr. Friesen go? Did I lose Mr. Friesen? There he
Okay.
is. Hey, Rob, how you doing today?
Not too bad, thank you.
All right, let's run down one of the choppiest days in the history of the S&P 500 index futures. Folks, we have been up, we have been down, we are all around. We got the 38.58.50. That was your high. That's after you undercut the three bottoms right around 38.05. Went to 37.85, and we are just dancing around unchanged here. Moving crude oil, bad day for crude after climbing over $64. We are down a buck 96 at 61.57. Gold finally gave way to the bottom of that trading range. We're down 45.90 at 17.29.40. Silver going the same way. That's down a buck 09 at 28.60, or excuse me, 26.60. And Bitcoin ending the week on a bad note, down nearly $3,000 at 46,500. How you doing there, Mr. Friesen?
Well, good. I'm looking at the same things you are there. We've had quite a interesting day or a couple days in this battle between the bonds and the bulls. Bonds and equities, right?
And how's it turning out for you? I just we got a couple minutes here before we
Well, these
bring
are
on our first guest, but let's just talk about how the week went and how it's ended up for you heading into the end of the month.
well, interesting. We do have the turn of the month effect, which means that there's a lot of that's changed in the last day of the month over last sort of 2 to 3 years. There seems to be, due to institutional capital requirements and things at the end of the month, reports that have to be published, that there seems to be a bit of a deleveraging on the last day, but you usually have sort of a positive effect going then into the first day of the month, which has proven to be, one of the better performing months. So, if you can find some deals out there today, it's possible that they perform really well on Monday. The backdrop to all this, though, is this tension between the bonds and the equities. And there's some significant moves in the yield and the bonds, which is almost kind of a warning shot of some flash crashes occurring. Well, we had a flash crash on the Kraken crypto exchange there. Ethereum dropped on Monday from about 1,600 down to 700 or so. So that I'm just wondering if that's going to show up a lot more in equities here in the next little while before it works itself out of the system. Have these
Okay.
flash crashes, right? So
Yeah, for sure, for sure. So let's just go a little bit more. Is there any sectors that you would like to highlight?
well, let's look at gold on a monthly for a minute and just see, as we started this year, what has been the context and the backdrop of that. We've had a lot of discussion about, people don't need to hold gold anymore. Bitcoin is the new gold, right? We've seen that argument over and over. So let's look at what the spot commodity or the gold future is actually doing there. What do you want to pull up on your screen?
I got the front month futures.
Okay.
Yep, that's what I will pull it up there on the screen in 1 second. But go ahead.
Well, you can see that we had a new high in gold made in the last couple months, and then within the last 6 months, and then we started rolling over from that, and it just hasn't been able to make any more new ground, and we're starting to see it really give it up. So this is interesting when you think about the risk that's potentially in the market with the frothiness of it and so on, and yet gold isn't being viewed as a safe haven anymore. But we did have a rally in the dollar, so it looks like a little bit of flight to quality there. And I mean, all you can do is go with the current trends that you see until they play themselves out. And I like to look at multi time frames of things. So, example, gold. It's not helpful just to look at what's happening one day to another. You have to be aligned with the greater flow of traffic. Where's the money flow, and it doesn't seem to be into gold and silver now.
No.
We had our little silver spike there with the Reddit,
Yeah, if
activity.
you think if gold can't rally in this environment, then when the heck is it going to rally? Right? Right? That's what I'm thinking, and I think I've been sticking with my goal for a little bit too long here. But what we're going to do here is we're going to bring on Craig Johnson, and he is the managing director at Piper Sandler. Craig is a longtime friend of the show, longtime bull. We are connecting to his audio. I am gonna unmute him, and we are going to bring him on. He's gonna have to unmute himself. Craig, can
Hey,
you? How you doing?
I'm doing well. How you guys doing?
Good, good. The old I forgot to send you the link trick.
It's okay. It happens. It's Friday, right?
Yeah, boy, I'm looking forward to it. So, first of all, I got to ask you, what do you do on a day like this? I mean, we undercut the lows, right? They were from earlier in the week.
Yep.
We came back. We made a new high in the session. We're starting to stay green. Now, my super positive out of this session, and I love the big boys, right? I followed the S&P 500. Apple up 2.75%. Microsoft up 2.28%. Amazon up 1.41%. Google 1.1 and Facebook 3.3. I'm a firm believer that you need these five stocks make up 20% of the index. So for me, I like to turn into these stocks. What's your appraisal?
Are you there?
Yeah, I'm here.
All right.
Here.
Sorry
Yep.
about that. I guess
That's okay.
look, Joel, I look at this and I'm thinking that these are the big heavyweights in the marketplace, and I would say that these are kind of almost like money market funds for most people at this point in time, right? I mean, if you're nervous about the market, you want to be fully invested. What do? You buy the biggest, most liquid names out there, and you would be looking at Amazon. But look, don't be fooled. Today's price action, you're flirting with your 200-day moving average. So the buy the dip crowd is going to be out there trying to buy the dips on these kind of names. I get it. Listen, these are all great companies. I'm still not convinced that we don't have further downside to go. And one of the things that I've been thinking about with this whole market, Joel, is, we've had a 75% move from the March lows to the recent highs for the broader tape. Why not see some sort of retracement level of that move? Maybe perhaps you got to come back toward a Fibonacci retracement level of 23.6% or even a 38.2. I think there's going to be a name and there's going to be a reason to see some backing and filling in this tape. There's zero question in my mind, Joel, that we are at a point in time where this market is rotating toward the early cyclical type names. We're seeing rates going up, 10-year bond yields are going up. And anybody who's been in this business, who's done a discounted cash flow model, and again, you heard that from a guy who likes to look at charts, knows that as you put your risk-free rate into this, you are going to have to look at it and say, I got to have a smaller PE multiple assigned to these stocks with a higher risk-free rate going forward. Again, there's no mime or internet Reddit site or any of that other stuff for this stuff, but that is just basic sort of market fundamentals that I think people do need to pay attention to.
Yeah, but I mean, it's just like today would have been a perfect day to get a little bit more of a correction, and the market just can't do it. Is it just too much money out there sloshing around from pumping Powell? I mean, like today was a perfect day. You cracked the three lows. It just like for me, I'm as much as anybody like when trading a market when it's going down, but holy mackerel, if you stay around too long on the short side, you get your head ripped off. I mean, I don't know what is going to break the spell. We end of the month, maybe we have some end of the month, jockeying for position. We'll see what happens on Monday, of course. But great appraisal. I want to talk to you. You're like one of the When everyone else on Wall Street was hiding under their desk and getting all bearish, like me and Dennis, in March and April, you were saying, man, you got to buy the cruise lines. And I'm like, this guy is crazy. I mean, why? American Airlines, you were talking about the cruise lines, you were talking about airlines, cruise lines, the reopening trade. Man, I mean, now it's here. Do you feel like it's kind of like, like sell the news on this, or do you think the party's just getting going?
I think there's still room for some of the cruise lines to move, Joel. But take a look at a chart of like TRIP. Like Trip to me is a stock that's obviously very strong today. I feel like this is almost a better reopening play at this point in time. So I would think about rolling some of the profits out of the some of the other airlines, the cruise lines, some of the other things, and put some money into Trip. The chart setup looks great. We've had a huge major bottom put into this name. And with everybody looking to travel, they're going to need help figuring out where to go, what to put, what to book. And Trip is a name that we've recently rolled into for our model and for our portfolio too, Joel, because I think it's a really solid name to be thinking about.
Man, you got to get that 50 seller out of there. I
Yeah,
mean, look at that guy. He's been
correct.
there for 3 sessions in a row. So someone maybe just working out of a piece there. But boy, oh boy, you're trying to do it right now and 3 days in a row hitting Trips. So, okay. How could RCL lose $5 a share and rally on the week? Tell me how that's possible.
I think that RCL is going to lose the $5. The fact that they've got among the best balance sheets of all of these cruise lines out there. And I think right now people recognize that needles are going into arms. They're looking beyond some of these short-term problems. And they are at this point in time focusing on bookings and those kind of activities coming up. As we get into the fall, people are going to want to go on vacation and they're going to want to get out of the house. And, the cruise lines are an easy way to do it. And RCL is probably your best player.
Okay. All right. Do you want to touch on any other sectors here? The banks have been perking up because of the thought of higher rates. I see JP Morgan's down today. Could you give any thoughts on the banking sector? I mean, everyone thinks rates going up except for Jerome Powell.
Well, look, there's going to be an interesting sort of battle between Jerome Powell and also ultimately the bond market itself. And again, the Fed has an unlimited balance sheet, the bond market doesn't. But at the end of the day, I think it's, we're kind of mincing words. If the market is going up because we're looking for inflation, or is the market going up because there is good growth in the economy? I have a hard time distinguishing between the two, but rates are going up. If I look at something like a JP Morgan or any of those kind of names, I still think the financials are going to work. The 2 to 10 spread continues to widen out, and they also have huge loan loss reserves that they're going to have to start to unwind. So I would definitely be looking at the financials and thinking about taking a little bit more positive of a stance toward the financials. Still, even at these levels, I think there's room to work. Joel, I'd also say we got to look at energy, right?
Okay.
Every single portfolio manager respectfully that I have been chatting with over the last month and change has said, it's a small part of the benchmark, right? And they're right. It is a small part of the benchmark. But some of the work that we've been doing, you're up 20+% on a year-to-date basis for a lot of the names in the energy sector. Pull up a chart like Pioneer Natural Resources, PXD. This is a great looking chart that when you look at it on a weekly basis, you've made your classic higher low, higher high, downtrend reversal is starting to unfold. These are the kind of stocks that you want to play. And if you think there's going to be a reopening play, cruise lines, airlines, more miles driven, you need fuel. It isn't going to get done by wind or solar power, Joel. So you're going to have to see this energy trade work. And frankly, there's not a lot of the big boys there. So you should be there before the big boys get there.
Okay, that's a good point. And just before I let you go, I just, being in the Motor City, the auto industry near and dear to my heart. Ford stuck its head over $12 the other day. They jammed it right back under. GM seems to be pausing on the rally. Tesla Well, it's not part of Detroit, but that pulled back. Could you just give us the bird's eye view on the auto sector?
So, Joel, I hope you got friends that work at Ford because I'm in line for the new Ford Bronco.
Okay.
Okay. And I can't wait for you and me to go have a little conversation with them because it sounds like this thing may not arrive until the fall. So
Oh,
I want to get that Bronco. I want to get that roof off. I want to get those doors off, and I want to drive that around this summer. There's huge demand not only for the Bronco but for the new electric Mustang and those kind of cars. There seems like a pretty big line and pretty big line people lining up to buy these cars. I look at the charts on this on a daily and a weekly basis, and it looks like we've got a pretty big downtrend reversal underway. Keep in mind that you called them, what did you call them? Pumping Powell.
pumping Powell.
Pumping Powell, right? Well, there's
Yeah.
a lot of money. There's a lot of checks coming in, a lot of fiscal policy checks coming through. So you got Pumping Joe, you got Pumping, Powell, you got everybody putting money into this. I think you're going to see the car sales do pretty well. And on top of it, they're not discounting a single thing for those cars, nor do they need to right now.
Yeah,
So
that's correct.
great downtrend reversal. I would stick with that reversal at this point in time and continue to play this alongside in the big old Moldy City there, Joel.
All right. Rob, you got any questions for Craig before we let him go?
No, that's great. Good information. Appreciate it.
Craig Johnson, Managing Director at Piper Sandler, joining us here on the last half hour of Power Show. Craig, it's always great talking to you, and we will get you back on again soon. Thank you, sir.
Thank you. Have a great
Thanks,
day.
Greg.
Okay. All right, we're catching up with things here, Rob. We were at 353, and we are just. I'll pull up the S&Ps here, and this is chop suey. I think someone posted the imbalances, but if they were buying balances, it looks like they're going to get offset. Rob, here, I know you like to do opening, opening imbalances or opening orders only. Last day of the month here, a lot of jockeying position going on. Do you stick with the same rules on a day like this, or will you adjust them because of the volatility?
Well, I mean, one of the things with trading is, are you being adequately compensated for the risk that you're taking, and planning ahead about where you want to own things, before you have a chance to get in it. So if you had some symbols that you were looking for today, then the market gave you a sell-off gift, right? So I'll
Mhm.
give you an example. You might go in at the close and take your position, or you might have taken it, on the dip that we had. We had a few dips today, as you know. But what's sort of in the seasonality forecasts would be, companies like Lowe's and CRM and Micron and things like that. We mentioned a few yesterday that are set up for a positive expectation for
Mhm.
the turn of the month. So the first trading day of March. Now you can choose to be completely naked and exposed, or you could choose to be offset with something like the spider if you had a diversified enough basket. If you're trading large caps and you have a few different industries matched up, maybe you take a little bit of oil. Stuff's been showing okay. A few banks, some of the tech stocks, things like that. If I flip it over to ETFs, I'll give you an example of some of the ETFs that are
What
showcased.
percentage of your trades are you hedged? Would you say almost 100%?
100% for open to close, or what? What do you mean?
Yeah. I mean, well, I know you have your intraday stuff, but your overnight stuff. Are you? Because I know Dennis likes
Well,
to
I
put on
mean,
a lot of hedges. Intraday is a little bit different, but overnight, are you pretty much hedged on all your things?
no, not necessarily. Depends what the strategy is. So if the strategy is SPAC related, I mean, really it's a different model for that strategy entirely than it would be if you were trading Coke against Pepsi or Home Depot against Lowe's or things like that. If you don't want exposure to the industry, then the best thing to do is to find adequate hedges. If you don't want completely naked market exposure over a weekend or whatever, then you can find some ETFs to hedge against your stocks. But in a buy side market, which is what we're in, it's not wrong during bullish phases to be extra long dollars, or beta. Certainly pay attention to the betas and the volatilities and make sure that you're not fighting an upward market. So that's part of the trick of hedging is it's not always advantageous to be perfectly long dollar, short dollar hedged, because essentially the market's a buy side market and keeps going up at an average of, over the long sample, 8% a year, roughly, right? So you want to pick your battles, and there are times when the market is starting to show signs of wanting a retracement, wanting a bit of a correction, take off some of the excess. And the first thing that starts is some of the banter. You heard banter from Yellen, you've heard banter from other people that have been around for a long time. Hey, Art Cashin on the floor of the New York. I mean, what is his experience worth anything? He's been in the markets for years and years. So, he says it's getting a bit frothy. I mean, does that help rein in things? It could be like, for example, on that Ethereum flash crash, they say that maybe somebody just sold their lifetime holdings, just done. These kind of things can happen when the market starts to get very frothy on a whole bunch of levels. And that doesn't mean that it's not going to continue to go up, but it doesn't go exactly in a straight line most of the time, right? And now now you've got this kind of battle with the treasuries, the yield, the impact that can have on currencies. Just take a look at the recent currency moves. British pound dropped, Canadian dollar dropped, Aussie dropped, US dollar rallied just in this last day or two here. Seen an abrupt movement there too. So something is afoot, as we would say, right? The market's not been happy this week, and it's not been the same as that sort of wind at your back that we had all through January and the beginning of February. It's definitely had a change to it. Some of the excesses are being reeled in a little bit.
For sure. And I think that, and we're coming up here to the closing bell. What I think, from what I've experienced, over the years in the markets, when you're chopping around, when you're having this kind of intraday volatility and overnight volatility, that doesn't bode well for the market. I think with the market, you want to see smaller daily ranges contracting, and just the kind of market I hate to trade. Just goes up, boom, up, boom, up, boom,
Right.
up, boom. So I'd have to agree with you. This action here going into the close is UGLY. We were just kissing. This is a 5-minute chart here. 10 minutes ago, folks, less than 10 minutes ago, we were kissing 38.50. And now we are red on the session. We just had a 40-point move in 10 minutes. I hope you all are being careful out here. This is just another. Oh, my Lord, what is going on here? They just crushed this thing on the close.
So
under 3,800, and now we're trying to bounce. Did you see that, Rob?
Yeah, you heard Bob yesterday say he likes to trade the last 2 minutes of the day session. Well, now you know why. There's a lot of hot money and a lot of reversion to the mean. There's a lot of VWAP considerations, all kinds of things that come into play. And so basically, we see these abrupt kind of moves, even on the big up days. You can see that last 2 minutes or 3 minutes. So as expected on the last day of the month, some deleveraging, some adjusting for the weekend risk, which is 5 times the risk of any other day. When you factor in all the things that can happen on a weekend, and I'm talking about the short side and the long side, because that's when the deals get made. The mergers happen. That's when,
it's
macro.
a big, yeah. Yep.
So we say basically weekend risk is 5 times that of any day. And probably with the settlement window, which will change if they go from T+2 to T+1, or hopefully a real-time settlement one day. The Tuesday and Wednesday, are the safest days to hold overnight generally.
Hmm.
And so Friday is one of those days where, yeah, a lot of people buy rumors on Friday, to hold over the weekend. And then lots of great stuff can happen when you walk in Monday, but it's also the other way too. It's one of the riskier times to hold over the weekend. So
Okay, so we're gonna do our Sunday night gig again, right? So we'll
yeah,
be live here Sunday at 6 p.m. I'll send you guys a notice, or check my Twitter over the weekend. Rob, before I let you go, I'm gonna post a link in here. Tell us what you got going on next week.
so Wednesday, about 15 minutes after the cash close, so 4:15 p.m., we're going to do a webinar on how to really effectively be a scale trader. Here's one of the things that I've seen, and I've worked with a lot of point and click traders. There's a tremendous amount of frustration with point and click trading. And I'll tell you, you can simplify it a lot by planning ahead of time your entry and exit points, and actually being in the market and being there for the noise, already having your orders placed at strategic points, versus trying to figure out, oh, I think it's going up. Oh, I think it's going down. Remember, the market can give you a bit of an advantage in the sense that it can go first, and then you can make your decision based on what you can lean on or your if-then statements. So we want to explore all that and showcase how to effectively be a scale trader. One of the easy areas to do, if you like SPACs or you like other things like that, we'll explain how they work and what you can do with them. All right.
All right, Rob, I'm going to let you go here. I'm going to stick around for a few minutes on this frothy Friday here, and cover for symbols for the folks that been kind enough to join us here in the last half hour of power. Rob will be communicating over the weekend. Thank you very much, and great information. Looking forward to
All right, Joel.
speaking with
Thanks
you
a lot.
Sunday night. All
Okay.
right, folks, here we are. A wild day on Wall Street, a wild week on Wall Street, and not quite the end of day session that I wanted to see for the Bulls, at least. We probably had some heavy selling balances there. It took us down, now trying to recover. Red on the session. This is one of the lowest closes we've had in quite some time. But since I had a late start here, I want to do a few symbols for people, and then we will call it a week. Someone's asking about Disney here, and boy, oh boy, I didn't know this thing snuck up this week and made a new all-time high. I don't, I don't know where I was sleeping on that, but that high was sold again here, going into March. I just think what you want to do is you just want to hold these three or four lows in this area. Very important. Now, if Mr. Market gives way, that you could have some problems here. But this is your area that you want to hold. You had a series of lows, the 181 to 182 area, actually critical for that to hold, or else you can see some more downside in Disney. But I did not have an eye on this one. Did not see that creeping up to a new all-time high. So there is a look at the House of Mouse. Uh, Disney. Andrew Garver, a loyal member in the morning show chat. Uh, Axion. Support is support until it's broken. It's taking a lot of pokes here, Andrew. Keep your eye. Man, this was even 160 was even big back here. Boom. Once again, just holding this 160 area. You kissed it today. Pull back. Now, if you're fortunate enough to get a rally off here, you want to make sure that you get back half of that move and you hold it. That takes you back up to 185, 186. But leaning heavy, make sure that that 160 way does not give way on you. So that's it for um, AXON. And someone's thoughts here. It looks like I can't really see that symbol. The NFTS. If that is correct, I will pull that up. No, it's not. So I will not look at that one. Maybe throw your other symbol in there again. But Andrew, that is an interesting area. Apple, well, it gave away a lot on the close. Really bad tick. Wow. Just like the S&Ps, your top component there loses $4. So from blank to blank, folks, this is not the kind of close that you want to see. Uh Good, Kevin. I'm glad you enjoyed that guest. He's It's interesting to hear that Mr. Johnson's a little bit tentative on the market because he is one of the staunchest bulls that we've had on the show in quite some time. We're gonna do a couple more symbols here, and folks, all this stuff. I just want to reiterate: this is for informational purposes. You do your homework, do your research, take whatever information you can, but this is not investment advice. I want to make sure I got that in. DocuSign, DOCU. Let's see how that is acting today. Mm, Uh, Not good. I mean, it bounced off that low, but look at this 220 area. Not much under that. A lot of these charts are looking the same. Underneath 220, yeah, you have this low and this low. But once again, look at your lows for today. Look at your lows for the week. This is important. Hopefully, you can get a bounce in something like this. It's made three monthly higher lows in a row. So it looks like that string is about to be broken. All right. S&P's under 3,800 right now. Continued selling into the close. Week close. I don't know if we're going to get down to that low of 37.85, but everyone wants out of the pool and they want it out right now. All right, folks. Been a long week, been a long day. I'm going to hop off now. Please join me again Sunday at 6 p.m. Eastern Standard Time. I will put out a tweet with the link to the show. It's due to be a wild open in the futures here, especially the activity that we had. Still green for the month of February, folks, but not nearly as green as we were just a few days ago. So that's what you're looking at on the daily charts. This is Joel Elconin, pre-market prop, signing out. Have a great weekend.